Grega Horvat is based in Slovenia and has been in the Forex market since 2003. His approach to the markets is mainly technical. His specialty, however, is Elliott wave theory, which could be very helpful, especially if you know how to use it in combination with other tools and indicators. He's the owner of EW-forecast.com, but before that he was working for Capital Forex Group and the LFB.com. His feature articles have been published on FX Street, TheStreet.com, Action Forex, Forex TV, iStock Analyst, Forex Factory, FXTraders.eu, InsideFutures.com, and even his appearance on Real Vision TV. He also won the award on FXStreet.com for Best Forex Analysis in 2016 and Best Buy-Side Analysis in 2018. It's a pleasure to have you here today. Over to you. I'm looking forward to hear what you have to say, Grega.
Sure. Thank you. Thank you everyone for attending. Thank you for inviting me, Jody. So I'm sure you already heard a lot of basics about the Elliott wave theory. So I will try to be very quick here and we'll actually go to real-time analysis and I will try to show you how I approach the markets. So what is the Elliott wave theory and why I think it's work? Well, it's an approach to analyze financial markets and trend by identifying extremes in investor psychology. Market will move from pessimism to optimism and vice versa. And you know, if you just remember Bitcoin, when everyone was talking about Bitcoin 2 years back, then you know that maybe optimism is coming to an end, that actually new cycle is around the corner, right? And the same thing was actually in March. Everyone was concerned about the coronavirus and actually you can see that prices very quickly picked up. So I'm sure that if you know the 13 patterns and you know how to recognize them and you know the personality of those patterns, then everything what is going on the price structure could actually be in your advantage. Okay, and why I think that Elliott wave is useful is because it's combination of both. Combination of technical analysis and crowd psychology at the same time, right? So tracking and analyzing the markets, it's actually all about probabilities. Nothing works 100% of the time. But as I said earlier, if you know the personality, if you know the rules, if you know those patterns, then obviously you should be more often right rather than wrong. But as always, we have to consider risk. We know that it's only the market who is right, and we have to respect the market and the price action. Is Elliott wave for everyone? Well, I think it's not. It's only for those who have passion for it. Don't come to me and say, look, Grega, just try to teach me Elliott wave. Well, if you have passion for it, then you have Google, you have a lot of material, and you must show yourself that you want to learn the Elliott wave principle. Okay, because I will not learn you from start to the end. Firstly, you have to fall in love with the Elliott wave principle, and once you want to make a move to a new level, then you come to me and I will show you how I approach the markets, how I use the Elliott wave theory. So the Elliott wave theory is only for those who have passion for it. You really have to, as I said earlier, to get in love with the technicals, with the sentiment, and of course with the charting. Okay, I will also give you some of my trading tips, which I think can be very, very useful. I have actually, this list is much longer, but we don't have such a lot of time, so I will try to be here very quick. So analysis versus trading, you have to realize that this is not the same thing, okay? I can analyze 50 charts per day. I can look and scroll very quickly through 100 charts per day because I don't have to level each chart. I just have to see the price structure, okay? And if I make an analysis, that doesn't mean that I'm actually trading it, okay? I can analyze on a daily basis a lot of markets because I want to spot a clear pattern, but maybe I will not spot it. And if you see me sharing some charts, free charts that I shared a lot actually on my Twitter feed, that doesn't mean that I'm trading it, but maybe I'm just watching it for my interest because maybe there will be opportunity in the near future, okay? And try to trade and focus on markets with clear pattern. That's key, okay? Don't fall in love with just one market. For example, I remember myself very well in 2003 when I was just being familiar with cable and the euro dollar, and maybe it will work for some time, but when the market will just move sideways and you will get trapped or trapped yourself in some consolidations and there will be no volatility, it means there are no opportunities. So it's very important for you, if you're a trader, that you are spreading your investments on different assets, FX, commodities, stocks, bonds, metals, energies, whatever. You have to find the clear pattern. And we know what is the clear pattern. You have 5 waves up, you have very strong trend, you have 3 waves drop, and you have on a smaller time frame maybe continuation of this larger trend. Those are clear patterns. So when you know what is the clear pattern, if you open your chart, okay, and you will see and recognize the pattern in the first 20 seconds, then this is the clear pattern, okay? You will immediately recognize the 5 waves up. If you will spend maybe 5 minutes watching at your price chart, it means that the price itself and the structure, it's not clear, because you will have too many different scenarios possible for labeling the wave counts. It means it can be very confusing because a lot of things can happen. So that's why it's very, very important, if you are trading different assets, that you move from one asset to another and try to find the clear patterns with the clear wave structures, because only those can give you or increase your confidence for potential trade setup, okay? Also, try to trade less. I personally take between 5 to 10, sometimes even less than 5 trades per month, okay? But this will be very helpful because you will be more selective. Trust me. If you will on Monday say yourself, okay, last week I made 5 trades, all trades, or maybe 4 of them were very bad, 1 was okay. Try to make in this week maybe just 2 trades, okay? And trust me, you will be a lot more selective. You will be very patient and you will look for the clear trade setups that I just mentioned earlier, which are very important actually to be identified for potential very good trade. Also, what I use correlated markets. I use correlated markets to confirm my analysis on the market I'm tracking. For example, sometimes I'm looking at the euro dollar. It was actually the case 2 weeks back. As you know, euro dollar has been trapped in the range for a while now, for 2 years, and I didn't have very clear price action actually to confirm where the euro dollar could go. But then I looked 2 weeks back, I looked at the dollar index. And I know that those two markets obviously are very tightly correlated, but there's not 100% correlation. And on dollar index, it was much better, clearer pattern. I recognized sharp drop from March highs. I saw a triangle and I said, okay, that should be very clear. And this is what I was talking about earlier. You have to recognize pattern in the first few seconds when looking at the chart. And I saw a triangle and I saw, okay, then maybe dollar index should decline here. So, okay, I have an answer for the euro. Then I also looked on cable and everything was matching up. So if the price itself and the structure on one market is not very clear, then maybe try to look at correlated markets, okay? But if the pattern on one market is clear, then maybe that's enough, because after all, each markets are important for themselves, and they will have their wave structures. And the Elliott wave structure for this market, for one particular market, is still the most important. But it's good to have another market that confirms the whole situation. Fundamentals are lagging indicators, okay? Fundamentals are good, definitely, we have to track them, but it's hard to trade them, okay? Especially if you're an intraday trader. Maybe if you're a long-term investor, it's a little bit easier, but still, I mean, we have a lot of economists, right? And no one will tell you exactly how to trade to be profitable from fundamentals. Why? Because fundamentals change. And fundamentals, in my opinion, are calculated in the price. That's why the price itself, it's very important, okay? So if you listen to the price, of course, you can be positioned based on the price action, based on the cycle, based on pessimism and optimism, or optimism that you expect, you can be positioned for fundamentals before they actually happen. Indicators such as RSI, MACD, stochastic, all is good. But in my opinion, if you're an Elliott wave trader, you should not look for these indicators to be your primary tool. Why not? Because RSI, MACD, stochastic, this is all what is calculated out of a price. So it means that you get the RSI, firstly you have to see the price. Firstly you have to you need to have price of the stock to make the RSI, to make the to make or calculate the MACD. It's not the other way around, right? So it means again that price itself is the most important. Of course, it can be useful, but only as a secondary tool to confirm your Elliott wave count. Where are we, or is it this fifth wave? Do we have a divergence on the RSI? Is maybe bullish momentum decreasing? These kind of stuffs are very, very important just to confirm your wave count, to be a little bit more confident on what are you looking at. Also, I really love candlestick formation, especially daily and weekly candlesticks, not so much 4 hour or 1 hour, because I really will try to avoid the intraday noise. Okay, so if you will use daily candlesticks formations, RSI, MACD, stochastics, in combination with the Elliott wave principle, I think that you will actually improve your trading skills, and even if just the wave count, I think you will be better with this. Important is also use confirming price action. Okay, if I say we have here an ABC down, right? That doesn't mean that actually this is an ABC down because I just said it's ABC down. Well, it's still the market which is at the bottom of potential wave C at potential support levels. So what you want to see to make sure that this is the ABC, well, you have to see a bounce. It's only the market who can tell you if you are right with your wave count. Okay, it's not the market that will follow your wave count, it's the other way around. You have to follow the market. So if you see an ABC structure, you still have to be open-minded. You have to realize that maybe wave C can always become wave free, right? But if you see the market reacting from that level, from your support levels, then this is a confirming price action, and then you can look for potential trading idea in the direction that you firstly anticipated, because there's still a lot of room to make money in the next wave that you are expecting. Also, with my trading, I try, not always, but I try to use the open targets, because I have seen plenty times in the past when I was right on the one trade, for example, that I went out of a position too early. So actually those, if you catch wave 3, if you catch maybe just a wave C, can be extended wave C, or if you step into a trade a little bit early into wave C, it can be really good, and actually you can cover a lot of previous potential maybe bad or losing trades. Okay, if you just try to stick with your open targets, but always consider to move your stops in your profit zone, because trust me, sometimes there will be trades that will actually make your income. And also what is very important is that why I love to use trailing stops is because I don't want to exit myself. I want for market to tell me when to exit. Okay, it's so this is also what kind of approach with confirmation. It means I go out when market tells me when to go out. Okay, now we will I hope Jody will tell me when we have 10 or 15 minutes till the end. So okay, I will look at dollar yen. Okay, then I will look at cable, pound yen, Aussie dollar versus stocks, metals, and Bitcoin. So firstly, dollar yen. Okay. Well, I have been highlighting this reversal on dollar yen some time back. And this is the kind of a price action, if I will look at a smaller time frame, which I call it a clear pattern. We have a sharp bounce rejected from the lows. We have erased almost 100% of the previous decline. What this tells you? It tells you that the bulls are currently much stronger than the previous bears. And this tells you that market has changed. Then you have these 3 waves of decline. In fact, if you look at the 4-hour chart, what you see, you will see that the wave C was much slower compared to the wave A. This is one of the most important personalities whenever you will try to label the ABC structure. When you see wave C, okay, let me draw this here, wave C, and you just connect lines from B to end of a wave C, compare it to the wave A, and you can see that this slack was very sharp, this slack was very slow. It means here that yes, price is still bearish, we have lower lows, we have lower swing highs, but notice that bearish momentum is decreasing. It means that bears are not that strong anymore like they have been in wave A. Well, when you have wave 1, wave 2, and wave 3, it's the opposite. You have first slack usually very slow and the third leg very strong. So that's why I think that those personalities are very, very important to identify the correct price action and try to label the wave count in the right way. Okay, so what we have here, we have seen a very nice bounce and looks like that we are progressing to the upside. Another approach that is very useful is channeling technique. If you're familiar, if you know Jeffrey Kennedy from the Elliott Wave International, he has a lot of good educational material. So one approach is base channel. What is a base channel? Well, a base channel is when you connect starting point of a wave 1, okay, and end point and to the end of wave 2. Then you put the parallel trend line at the top of wave 1, okay? And as you know, if you're looking for an ABC move, then market will stop at this trend line, right? If this trend line is broken, then this is important evidence that this is not wave C, but most likely wave 3. Okay, so this is very important characteristics. Why? Because if you see a push well above this trend line, then of course you would expect that this trend line will actually react as a support on the way up. Okay, so here, if we just make a step back and look what kind of a price action we have seen earlier, 3 waves down, previously 5 waves up, and here we are now at this channel. Well, I would not be surprised if we see a break higher here, meaning that we could see much more upside for a wave 3, even back towards 111. Also, as I said earlier, look for correlated markets. And here I have the Japanese bonds versus dollar yen. Okay. And what we have here? Well, also very nice, clear 3 waves down. It looks like that price is picking up now. We are approaching here already this wave B swing high. It means that this market wants to move to the upside. And if that's the case, then dollar yen will most likely follow. So those two agree, meaning that I can be more confident in my outlook here on dollar yen. Now let's take a look also on cable. Now cable has made a very nice clear 5 waves up here from March lows. And then we have seen a countertrend movement. And when we have seen this reversal, I was bullish on cable. I expected a bounce. And the reason was because it was a very sharp reversal from the lows. It was in 5 waves. And then notice that this first drop here was made by 3 waves. It either meant this is a completed correction or it's part of a complex correction. Looks like that it was a part of a complex correction. But even when price was down here, okay, I didn't say to my members that we are going long. Actually, I still wanted, as I highlighted earlier, wanted to see the confirming price action. I want to see bouncing price. And what happened is we got a very nice 5 waves up above this trend line. And also notice that there was an overlap here with this subwave A, and this is key. This is very important, because if I would try to label the bearish wave count, I would probably say this is wave 1, this is wave 2, you have a wave 3, wave 4, you go down. Well, if you have an overlap, it means that there is not an impulse, and this is very important because you can be even more confident that after all this was a counter-trend movement. And so far you can see a very nice progress to the upside. What is going on here? Well, we are seeing very nice break above this base channel, as I said earlier. We are at the 161.8%. So we have two important evidence suggesting that we are in a wave 3. Not to mention that the previous drop clearly looks corrective. So I think that there is more upside coming above these April highs. So there is room to make money on the upside. You don't need always to jump at the lows and close at the highs, because there is a lot of room to make money in the middle. You just have to respect the corrective price action that occurs on the way to the upside. So I think there will be opportunities here on this one after a fourth wave pullback. And I said earlier, this can be at this upper base channel line or maybe middle base channel line, okay, from where I would expect more upside. And now we said, well, dollar yen is looking bullish, cable is looking bullish. Why don't we rather look at pound yen? So looking at the pound yen, well, I think we have a very nice price action here. This was the first recovery. This was a counter-trend movement. And this looks like a very nice impulse in progress, okay? And what I see here is that we are moving into some kind of a resistance here. There was small consolidation, there was strong breakdown, there was a gap and a retest of the previous lows and then continuation lower. And now we are approaching this level. So maybe I would assume that this could be a temporary resistance. And what I will look at the previous highs. And I see that the previous highs were broken here, okay? And quite decisively, because we have very strong movement to the upside. I will not even look at the daily candlesticks formation because we know what is there. Okay, so I think that there can be opportunity, again, after a pullback, you know, that broken resistance can become a very nice support, okay? So I think that this zone right there, I think it's a very, very interesting for potential continuation higher, not only because of this pound yen structure, it's because of dollar yen, it's because of pound yen, okay? So definitely I have this one on my radar list as well, because I think that there is room for much more upside, especially if we consider just yen currencies in general, okay? Now, let's take a look on Aussie dollar. Okay, so Aussie, here. I have been bearish on Aussie and was highlighting at the end of 2019 when I made actually free 2020 video outlook. I highlighted that we could see potentially Aussie declining all the way down to this trend line of this Elliott wave channel and into this fib zone. We have seen a perfect touch of this area and we have bounced. And what I think is going on here is that we have enough of data to say that the market is bottoming. So I assume that there will be opportunities on the upside, okay? But as always, it's much better to be patient and to wait on a pullback rather to gamble at this trend line, which could be potential resistance. Looking at the daily chart, we are also at this swing resistance and potential head and shoulders pattern could be forming if this resistance will hold. So also, I mentioned earlier, candlesticks that I use and also old school techniques is very useful. If you see a sharp reversal from the lows, which could be at the same time part of this right shoulder or the head and shoulders pattern, then you can be even more confident that after price will find a support, that we will see a broken neckline and that there can be a lot more upside potential, okay? Also, what I would watch out on Aussie, if you're trading Aussie, you should be watching what is going on stocks, okay? Here I have Nasdaq 100 compared to stocks, compared to ASI, and you can see that they are highly correlated. Okay, so if stocks will slow down at the near-term levels, which I would not be surprised, then obviously Aussie dollar would also come to the downside. And that would be perfect based on the Elliott wave principle, based on this technical resistance, based on potential head and shoulders formation. And why I think there can be a pullback here on stocks? Well, let me bring on this chart. Just a second. Okay, here it is. So this is actually the S&P 500. We are moving here into 78.6% retracement. And notice that below I have total put call ratio. And actually I inverted it just because of better, easier understanding and reading. So it's actually call put ratio. It means that when this market moves to extreme readings, okay, in our case, because it's inverted to the upside, it actually means that investors are buying a lot of calls. And if you're moving into extreme readings of these calls, actually everyone believes that market will rise, that price of this market will rise in the future. That's why they are buying calls. But if you see this data moving into extremes, we know, as I said earlier, markets moves from pessimism to optimism and vice versa. So you know what will be the next cycle, because markets are structured by cycles. Okay, and if you are seeing market at the upper side of this put call inverted chart, then you can assume that sooner or later this rise will slow down and could see a retracement. Actually, it's much better visible if you're looking at the moving average. It's actually moving average of this put call ratio. Okay, and you can see that we are at the upper zone here. So I would not be surprised if we see a reversal here. Not to mention that we have potential 5 waves up. So looking at the S&P 500 here, okay, we are here moving into this resistance. Ideally, we will see here a retracement. But I also have to respect the fact that we have here an open gap from February. We could easily just make a spike move to the upside. But there's two things. I don't want to short here if I expect a pullback, because as I said earlier, confirming price action is the most important. We don't have it. Okay, I just assume that this resistance will hold. But just because I said it, it doesn't mean it will. You have to see a reaction from the resistance to make sure that this resistance is really valid. Okay, so if we will see a drop, a very strong one, then maybe Aussie dollar will also come to the downside. But again, I would not be looking for shorts. I would rather maybe on some very weak stocks, but I really doubt. I would probably look for much better opportunities on the upside after a setback. Okay, so I think that wave 2, wave B, whenever it will occur, I think it can be very, very interesting to catch the upside, either wave 3, either wave C. You can see that I will never say that this is going to be wave 3, this is going to be wave C, because I try to be more like than a trader rather than some kind of long-term analyst, okay? Because I know that I can be wrong and that everything can change in the future. So I will say, okay, wave 3 or wave C can unfold in the future. And if this will be wave C or wave 3, well, I don't care. I will try to decide later when I will have enough of price data and information and personality and the structure to say whatever this is wave C or wave 3. But after a pullback, I think that there can be very interesting opportunity.
Gregor, you have only about 1 or 2 minutes left.
Okay, thank you. Also, I want to look at Nasdaq. Okay, so S&P 500 moving into resistance. Technology sectors were the strong one. And what we have here is potential ending diagonal. So you have a very strong sector moving with an ending diagonal, possibly calling for a top. Ideally, once we break to a new high, because then media, which I believe is already very, very bullish, would become even more bullish. And that's when actually the opposite may happen. So if this was very strong technology sector will see a retracement, a reversal lower, then you can assume that S&P 500, which is weaker, could definitely be also making a pullback. Also, very quick one on Bitcoin, since I mentioned it. So Bitcoin, either we are here in a triangle. I think that there can be opportunities after a wave E. Okay, that's one interpretation. And what I love about the Elliott wave, that you can have different interpretations, but the same directions. And here, there is potential completed big ABC down. Then you have 5 waves up, another ABC drop. You have 10,000 very strong resistance area. And maybe you will see a wave 2 pullback. And notice that even this one suggests more upside after a setback. So either you will see a wave E or you will see a wave 2. I think that this can be a very interesting opportunity after a setback. Also, head and shoulders formation, you could see it here. Shoulder, head, shoulder can be very interesting as well, suggesting that more upside and that cryptocurrencies can stay alive, especially Bitcoin. But they said after a pullback. Okay, so I hope I shared some of the useful information. I hope you loved my analysis. If you're interested in our website, in our cryptocurrencies and FX and some of stocks analysis, I also cover gold and silver and so on. Of course, you can visit our website, ew-forecast.com, and only for this event, we have never done this before, it's the open door event, meaning if you go to this website, register, you will immediately have for 10 days free access, no credit card, nothing. Okay, so just to see how I work, if you want like our charts, our work, just send me an email and I will sign you out. So just you can see your charts, those charts in a second actually. Okay, if you have any questions, I'm here to help. I'm also very active on Twitter, so make sure that we are in touch. Okay, thank you very much everyone for your attention, and hope to see you next time as well.
Thank you so much, Gregor. You gave us so much great analysis today, so much to think about.